Hello and welcome to Options Trading Pilot. This is your chief pilot, Pro Forma 24, also known as Guillermo. Man, has it been tough or what on these trades? Now we've gotten some long trends and you could have hopped on, but I think that the key to really trading and making money right now is a lot of scalping, because the moves, the candle moves are so huge that it's difficult. So I'm just going to break down my thoughts here and where we are and what we need to be focusing on in order to provide a little more relief. It's just a lot of switchback moves. If you're a long-term investor, you're kind of lost, right? Because either you get in at the top because you're thinking continuation, and then the next day it gaps down, or you get in at the bottom and then it just moves up strong. I mean, what about yesterday? I had a friend text me. He's like, what happened yesterday where the futures market was down, what was that, 3%, 3.5%, and that it moved up 3% during the day and it ended up there. That has only happened 2 other times in the last 40 years. So very, very interesting, right? And so what happened the last 2 other times? Well, we had a down, it followed with some down years, right? That down year, which is like the last one was, let me see if I can look up real quickly what he was stating. He was saying that the first one was in 2002. And so in 2002, after we had that huge recovery, we followed up with a 19% down. And then in 2008, which is the other time that it happened, more specifically September 16, 2008, according to the data he provided, we had another 46% down. So I'm not trying to be a bearer of somber news here, but I think, I'm going to counter that with the bull aspect. And I'm just a optimistic person. I'm bullish generally. So just know that's where I'm coming from. So I just want to kind of give you the background so you can make better decisions. I'm not here to tell you what to do. Everything that I do here is my opinion. Okay, guys, just my opinion. So we're looking at the QQQ here, right? And so we can see this strong down move, then a great upside return, and then we are headed down over here. This is February 22nd. Let's update this chart here. Then we've had these 2 strong, bullish moves. I mean, look at this, the stochastic up, slow stochastic up, scooter rating is a little down, but look at this candle. I mean, that's amazing. So what are the things that I like to look at? I try to keep it simple, right? You can't make decisions, and you have to think about just the big, strong, just ideas, the macro ideas, so you can get better moves. So here we go, right? So from this bottom portion, from here, the Fibonacci retracement was like 371. We got to 370.1. Then it came down and it hit and it tried to capture it again. And then it's given it up. Now we're down here, right? Now we're down here. So let's redo that. Let's redo that and let's look at it from a bigger perspective, which is down here. From this down, we need to capture that 360 number to move up. Now, there's also the idea of this down channel, right? There's also this idea of this trending down. Oh, let's see. We're trending down here. You can see we briefly surpassed. This is a switchback that we're talking about. Let's try from this line here. It's tough, right? Look, I mean, this channel is really tough. I mean, there's nothing to support that, right? It's like, so as you can see, I mean, we can get above this, but this has already happened, right? So let's add a little volume profile here. Let's share. Let's share my TOS here. It has a valid profile. Nicely today. So if we look at these Fibonacci lines, this is the daily, right? So we've experienced this. We went from one fib line to the next fib line. We overcame this low supply area, and we moved up to the high supply area, and we're moving past it. So, you know, as far as what we're looking at, the traders MACD, as you can see, is at 535.5. RSI is up. So we should anticipate, right? Because we're above here. We move into non-value to value, and we're here at 353.16. That's a nice move, right? And that should get us here. Now, has that happened in the past? We moved from like a medium value, we moved up past the value and even to the next fib line where there was a lot, but then it gave it up the next day. So while these numbers are sticky, right, at these points specifically, there's confluence on the fib lines, then we should see more stickiness, but we haven't seen none of that. To me, that's a problem, right? Because we're showing a lot of weakness. People are just letting go real quickly, or the algos that are out there are just, you know, triggering based on different reasons, and we're just moving past it. You know, we need to see a higher high here. We need to see a higher high, but can you make money on that move? Of course you can. But really, it's like, it's tough, right? Because if you hold overnight, you might see the gap down. So going back, I like to compare. I like to compare to see what we've seen in the past, right? So let's go back to my trusty old stock charts, the basic view, right? I always like to look at things in the basic view. Keep it simple, stupid, right? Here we go. Let's take a look at what happened in 2020. Let's blow it up a little bit to get to the point that might be relevant. Okay, here we go. So let's go back to these fib lines. So we have the good hindsight 2020 perfect vision. But let's say it's like we hit a low, there's a big candle, there's another big candle, right, that occurred. So we got this low, we got to this, and you know, this is a similar, obviously it's like, I read a comment from a smart gentleman saying, history doesn't repeat itself, but it certainly rhymes. So that's what we're trying to see here, right? Did it rhyme? Is it rhyming? I mean, we can see the island formation. We see two big up days. We basically recapture the 50% fib. What date is this? This is I can't tell, right? It's like March 3rd. March 3rd. Here we go. So March 3rd. And the next day's up. So we're feeling good, man. We're feeling bullish. I mean, things are positive. Traders MACD even went up, then it had a bump up. Whenever you see, I don't have RSI up here, but whenever you see like the slow stochastic or the full stochastic double back, because what we like is full motion, right? From oversold to overbought, oversold, overbought. Whenever we see it switch halfway, like here, switch it halfway down, this is very bearish when you see that. Very bearish. This right here, it's very bullish because it didn't go all the way down to the oversold area. So as you can see, it was pretty telling. We had a nice move. If you played from here to here, you made good money. Still wide candles, tough to make money in those situations, but some people did. There's a lot of money to be made. So it didn't recapture, and then look what we got. So let's go back and let's see what the full move looks like. Obviously, it's sort of like a guessing game, right? Look, we had this move here, that 513 that I really like. It recaptured it right here. You could have moved in before. Sorry, that's one of my signals telling me to do something. Buy or sell something. I haven't seen it. But as you can see, it didn't recapture that 38% line. but it's a full buy. And so when you pair up the moving averages with the fib, right? And look, Traders MACD came on really early. You get a confluence. You feel comfortable entering this market here. At some point, even at the high point, you're feeling really good. Obviously, the next day, you're like, oh my gosh, it gapped up and it's coming down. Where are we going to see? So remember, keep it simple. Stick to your metrics. Hedge out when you need to. Use your stop losses. Use your targets. So what we're seeing here, right, is like, don't get fooled. This looks bullish here. This looks bullish. And it could have very well done that because, look, we got a nice doji here and a nice gap up. This could have been a doji with a gap up. Same thing could have happened. This turned out to be the real move. I mean, right here, there's a confusion happening. That's tough to trade. You're feeling good, and then you gap down. And you're like, what the heck, right? So, and then you just keep moving. You keep moving forward. I'm a big believer in this 513 for the SPY. It's not the same. Sorry, this is the QQQ. I like the QQQ 513. It's not as good as the 513 on the SPY, by the way. So I'm not fully confident on that. My main guide is the SPY. That's what I like to look at, and it's similar situation, right? But notice on the 513, you never got pushed back into it if you just follow the 513. But it's a similar pattern. Now, okay, I'm giving you the bearish view, right? I'm going to give you the bullish view. So the bearish view is that we have a war that's happening. We have a leader that is going to test the mettle of the United States one way or another, and of NATO. So, that's very dangerous. So what I'm trying to say is that increases the odds for a more bearish turnabout. Now, I've seen the data out there. Whenever there's war, we actually check mark up. So that's one check mark towards the bullish idea. Obviously, before we get to the news, there's always the rumor, and the rumors create confusion. And so that we will see a lot of volatility at that point. So if it was just that, I would probably be like, hey, it's fine. Like, we'll be fine. But then now we have inflation, right? Inflation will create a situation where consumer spending will go down. If you don't know your Keynesian four-factor economics, I say that on purpose because I kind of find it funny that we want to narrow down the economy into basically four factors, but besides the case, everybody uses it. I still use it. So consumer spending is a big part of it. And so if we have inflation, it's gonna be tough for consumers to be spending tons of money. Okay, so we have interest rates rising and they need to go up. And that will also create more headwinds for the equities market. It'll create headwinds for the bond market. But if the equities market is going down, then the demand for bonds will go up, and that would hedge out the increase in interest rates, which is it's a nice move to do that. So when I say it's a nice move to do that, I'm not saying that for us to go ahead and trade the bonds, which it is a safety thing. So you go to the smaller part of the yield curve, which would be the shorter term bonds at that point. But that's just general idea, right? That when I'm talking about the move, I'm talking the powers that be making decisions. It's like, hey, the bond market is way more important than the equities market because it's bigger. And so we need to protect pricing on those bond markets as much as we can. And when influx of demand from people moving from risk on to risk off into bonds should hedge out a little bit in our increasing interest rates. So Volcker in the early 80s drove up interest rates, to crazy levels. I say crazy because he had the vision of what needed to be done. Now, the situation back then, technically was a lot simpler than it is now, just in numbers wise, right? Magnitude of numbers. So after saying all that, I'm not here to create fear. I'm trying to create comfort, right? And with knowledge you should get some comfort, right? So I give you kind of the background. There's a lot more to it than that, but I'm just going to give you, that's like the broad strokes, right, of what we're looking at as traders, what we're looking at as investors. And so we have a strong Friday. This is if this closes up, hopefully, right, then this would be the first Friday in 4 Fridays that will end up, which would be amazing. So again, I'm shifting now to the bullish case, right? The bullish case. Oh, let's see. Let's get a better picture here. The bullish case is that these candles were powerful, right? So just from a technical aspect, whenever you see large candles, we should see some continuation, right? Bullish case again. We have an infrastructure bill that's feeding the economy. Now, we can get philosophical here about what that actually is, but I'm not going to do that here. What I'm here to do is to show you it's like, hey, if government spending goes up, which is with that 4-factor equation, just to highlight, is government spending plus consumer spending plus savings plus net exports gives you the GDP, gross domestic product. And that's kind of like the background for our investment ideas, right? And why is that? Is because it's kind of like the big wind, you know, that is blowing our vehicles, which here I would say they're yachts. And so we have our sails up. And so it'd be great if we're not going against the wind. It's great if we're following the wind. So the short of it is that if you look at the bullish case, right, we overcame this low over here. Let's inspect it a little bit better. We overcame this low. That was a key low to overcome. We protected, we rejected strongly this downturn, right? We have this nice formation here, and we're seeing a continued move up, right? So these are all things that happened before, but nonetheless, why is it different here? Is because we've already absorbed these news. And look, I saw a comment earlier from one of the guys that I talked to. He's like, everybody wants to tell you it's been priced in, right? But look, there's something too about selling the news, right? Once it's there, just fade it out. It already happened. And in this case, it means we go bullish because there's no more uncertainty. The invasion already happened. It's already there. So the question I was asked earlier today was, Guillermo, what kind of news or what would happen in order for us to break out? I was like, number one is we kind of broken out a little bit right now, right? But number two, more importantly, we need to get unexpected good news. All right. Again, so unexpected means low odd news. Okay, so people are not waiting for it. So what kind of things would be low odd news? Well, I'm just shooting from what I'm thinking here. Number one is inflation numbers go down. Okay, that would be awesome. I would welcome that. Let's move that on. Let's move that forward, right? But obviously that's low odds. Unexpected news. I mean, at the very best, Putin just pulls out of Ukraine and moves back into Russia, and he's like, hey, like, I take it back. That would blow the market up out of the water, right? Again, unexpected low odd stuff, right? Even some kind of graded, prorated kind of stemming of Putin's advances, that would be much welcome. What else? Just eradication of COVID. Maybe that will push us up. You know, all these cruise ships and travel and vacations may drive consumer spending to the next level. That would be awesome. So, you know, these are just ideas of like things that would be unexpected. But the thing about unexpected, you know, I always tell people is like, you always got to be looking for the things that you don't know you didn't know. I'll repeat that again. You got to look for the things that you don't know that you didn't know. Guillermo, how do you do that? It's tough. I'm going to tell you that's tough. There's some little algorithms you can play with in your head in order to get there, right? To see things. But It's hard. It's hard. It's good. That's why this is, you know, the idea in Proverbs that talks about having a board to make decisions. This is why it's good to have a lot of ideas, right? It's good to have a Discord group where you share ideas. Somebody might think of something that triggers your mind to say something, right? To think about something, where they say something like, they say something wise. You're like, man, that's amazing. I'm gonna use that. And you might be just a step away, one little kilo nugget, right? To get your trading right, get your investing right, get your house in order. And so, gosh, I meant to make this short. It's 1:55 on a Friday. I still have a lot to do, but I've been getting asked a lot of questions, and it's been tough on the video. It's just been a tough trading environment. I really think that we are, in the end, we should be bullish, but again, it's like you should be trading light, take your gains, be really good about your stop losses, like be okay with losing trades. Like your win rate should probably drop a little bit, but if you see it the same setup again, go back in it and just keep at it, right? Obviously expenses go up when you're trading more and more, but just know that you just have to stay consistent, stay with your mechanics, and a lot of that. So I hope that helps. I hope that gives you a background, a little bit better picture. If you have questions, obviously like us and subscribe. Go to the comments, visit our Discord at, you can enter there and request access at www.optionstradingpilot.com. Again, that's www.optionstradingpilot.com. And we're here for you. We're here to answer your questions. We've been trading lightly. Just because of the nature environment. Sometimes we trade super heavy, but today on a Friday, we have this trending market, but you know, I'm still very careful. Okay, you guys have a great day.